Hey, good morning. Let's go over today's trade plan. So in the overnight session, we had support at 91 to 93 and yesterday's high at 98.75. And for the most part, ES has remained balanced within that range, holding above support, and we've seen sellers active at resistance. So at this point, heading into the open, we have pre-market support 91.5 to 93. As long as the market is holding above that area, it would tell us that ES is holding yesterday's breakout. So the buyers can maintain control above 91.5 to 93 area, and if we start breaking below it, then at the very minimum it signals a lack of strength in the market. It doesn't mean that we're in a very weak market. We're trading at the all-time highs, so any kind of pullback is not going to indicate all-out weakness, but in the short term, a break below 91.5 to 93 would tell you that there is a bit of lack of strength here because yesterday's breakout at that point would have failed. And below it we have support 87 to 89, and that's a spot where buyers can still defend that zone. And if we break below that, then we can get some liquidation type selling. Nothing, again, doesn't mean it's a change in trend, but we can get some acceleration on the downside into the 79 to 81.5 area, which is essentially the bottom of the recent range. And again, buyers can still be active at 79 to 81.5, especially if we are heading down there on relatively light volume, because at that point, if we're running on light volume, we would be exhausting the range as well. So this 91.5 to 93 is really what's going to help us establish our short-term directional bias, and it's really going to provide a big clue as to which side is in control. If we're holding above 93, then the buyers can still maintain control, and if we break 91.5 to 93, then that alone will be an early warning sign and a red flag for buyers. 87 to 89 can still be defended, but break below 91.5 means we have to start being a bit more cautious on the long side, and if the underlying internals are quite weak and the momentum is to the downside, then we'll have to be cautious even at the 87 to 89 zone. On the upside, 96.75 to 98.75 is the initial resistance zone. That is essentially yesterday's VPOC and yesterday's high, and above it, the market does not really have any hard resistance. We'd be making fresh all-time highs. So the only resistance we do have in this market at this point is 96.75 to 98.75. Looking at the other markets, Nasdaq and the Russell, those markets are starting to struggle a bit as well. And for that reason, I think even on the long side at this point, you want to be fairly conservative. You want to be careful of trade location. You don't want to overstay, because these are all aggressive prices, right? This is a market that's trading near the all-time high. So anyone buying up here is buying at an aggressive price. From a trade location perspective, buying above 94, above 93 is a fairly aggressive price. It's very close to the all-time high, and it really only makes sense if there are signs in the market that we're going to continue making all-time highs. So even long setups up here are not that conservative, right? These are riskier longs at this point, and we're seeing the other markets kind of tire out a bit too. So there could be some consolidation, and that's why you want to be a bit cautious even on the long side, compared to yesterday where you could have been a little bit more aggressive. Today I think it makes sense to be a bit more careful, just because we are seeing some of that weakness show up in the other markets as well. So yesterday you saw how the market went up on very flat internals. The advanced decline line for the most part was below zero, and I think today you don't want to see that. You do want to see some broader market buying happening, and if it doesn't happen, then it's probably better to be a bit more conservative, wait for some good trade location even on the long side, and if you don't get that, then just wait for the market to essentially tip its hand and kind of show you which side the momentum is leaning on the day time frame, and then be a bit more active in that direction. So today, there could still be a short setup coming out of this, again, depending on 91.5 to 93, how that zone is treated. So on the upside, 96.75 to 98.75 primary resistance. If we break out above that, there is no hard resistance. So at that point, it'll really be about what kind of volume and momentum we're seeing in the market. And if we're continuing on light volume, then the upside would be pretty limited as well, similar to yesterday. So those are really the main thoughts heading into the open. Very kind of more of a neutral type view at this point, but understanding that bigger picture, the buyers can still maintain control even if we get a deeper pullback. It wouldn't necessarily mean that the overall control is shifting to sellers. It could simply be from profit taking, and the market can balance and still overall remain within a larger time frame uptrend. So for those reasons, the pullbacks to support can still provide edge. It's just that if the momentum is too much to the downside, then you may not get reversals off of the support zones. You may just get kind of short-term bounces. So today I think it makes sense to be a bit cautious even on longs, but overall understanding that bigger picture, the buyers are still in control, and for that reason I think you'll still see some buying happening at pretty much every zone on the way down. It's just that there has to be enough of a bounce to justify the long setup. There has to be enough reward to risk in the trade to justify taking it long at any given zone. So those are really the main thoughts heading into the open. Let's keep an eye on 91.5 to 93. On the econ side, majority of the economic reports are already out of the way. At this point, the next economic report is FOMC minutes, and that's out in the afternoon. So the morning session is not really driven by any econ reports. So we could simply balance within a range this morning, and then perhaps get a little bit of directional movement off the FOMC minutes. The minutes are not really as big of a market mover, so not anticipating any crazy movement off the minutes. So those are the main ideas heading into the open. Let's see how the buyers react at 91.5 to 93. That'll help establish a short-term bias, and we will take it from there.